Hello, ladies and gentlemen, and welcome to today's webinar organized by To Be First. Today's webinar, we are going to talk about oil and gas and petrochem. We are going to make the recap of 2021 last year and also speak about the perspective of this new year 2022. So let me start by wishing you all the best for this new year. We are really happy to work together. Lot of success, lot of projects, lot of business. As you could see during the, and you will see during this webinar done by Jean Charles, that the actuality has been quite heavy and a lot of news around the oil and gas, but we were really, let's say, we're finding it really interesting today to take some time to reflect on the past year, because a lot of has happened already, and to see what will be happening on the next month. As you may know, from today and this first webinar of the year, those, let's say, meetings are closed events. You are only, let's say, users of Project Smart Explorer, or let's say a close relationship and close prospect we may have about the tool. So we are really happy to have you all on board today. A lot of people has been subscribing to our webinars, and we try now to keep it confidential to our own users. In the meantime, just to repeat a little bit the way we are going to work today, you will be able to ask questions directly in the conversation button, which should be somewhere here on the top. Do not hesitate to ask questions. We'll address all of them at the end of the process. I will send in the conversation some slide as well, a link to my email address if you want the slide. I will also send the link to our next webinar. The date has already been put on the calendar. It will be March the 10th, same timing, so people from Europe and from US can assist the meeting. And we'll talk about new application, mostly waste to recycling, biofuel, and sustainable aviation fuel. Those applications have been growing on the last 6 months, I would say, and they are taking quite a momentum now for the coming years. So we want really to address the technology and the market of those applications, because we are seeing them more and more, and I think it's a big opportunity for you to address. And of course, those projects are now part of the last release from Project Smart Explorer. Once again, thank you very much for attending this meeting. We're really pleased to have you on board. And now I'm going to pass the ball to Jean Charles, who will run the show today, and I'll jump back for the question at the end. So please do not hesitate to ask your question directly in the conversation of this meeting. Let's go, Jean Charles.
Yes, thank you very much, Jean, for this introduction. In my turn, I wish you a happy and healthy new year, full of success. And as you will see from this presentation, it looks very promising for 2022. So we wish you to take most advantage of this turning up of the market, as we have not seen for a while. So today, the agenda we propose you is a short introduction. As usual, just to remind who we are and what we talk about. Short reminder regarding the database itself, for the one who are not yet familiar with it, and how we handle the data. And then, of course, we'll come to the core of the topic of today, which is market news, the situation regarding the petroleum demand, and then we draw some remark regarding the recap of what happened in 2021 and how we see those perspectives for 2022. And then here you understand already some conclusion we can make from this outlook view is this emergence of new players. So we'll come back on that, and the energy transition new application. Of course, as you understood, we'll have opportunity to come back in very detail on the next webinar, but at least today we'll address them just to draw the picture of this energy transition application, and to take the measure of it and explain you what we talk about. And then, of course, we'll make some conclusion out of it. So again, as said Jean, you are most welcome to put your question all along that presentation or remark, and we'll be pleased to take those questions and remarks at the end and handle them as we used to do. So, short introduction again for the company, and just to remind who we are. As you understand, we are a family company. This year we are going to celebrate our 10 years existence in a few weeks now. So we are very happy after those 10 years to have made already a nice journey with many of you for some years. So thanks to you and your loyalty on that respect. So it's due to you if we are still there, and happy to speak with you today. The background of the company remains the same. It's just oil and gas activities with ABB on my side, or with Siemens on Jean's side and Air Liquide, and also on digital through association when it's about my career in different association related to the digitalization, and with Air Liquide or Siemens when it comes to Jean. So, and today, as you understand, we are both very active in non-for-profit association to share our knowledge and help to improve the competence of engineers in this industry, considering that we are ourselves engineers, and our network is also relying on engineers, and that's one of the DNA of the company here. So the data basic rules. So the database is, of course, Project Smart Explorer. The idea of this database is to see beyond, okay, and move first, see beyond to get a vision of what is coming in the market, in the pipeline, in the funnel, by proposing you a list, a rolling list of 1,000 active projects at pre-feed and feed, knowing that we archive the project more or less as soon as the EPC contract has been awarded, because we believe, and even more today, that as soon as you were involved in a project at pre-feed or feed phase, you don't need us anymore when the project is awarded in EPC stage. Just maybe a small change in the way we manage the database. So far, we had this threshold of $100 million capex to trace oil and gas and petrochemical project, which is still valid and makes still sense for those projects. But we realize that for energy transition, the threshold is far too high because there are quantities of very, very interesting projects. They may be demonstrator or pilot, but far below this figure. So we have a threshold somewhere around $10 million, maybe below in some cases, if we believe this project to be crucial for you to know. And of course, that changed a little bit the scope and the nature of the database in terms of scale about the project. But anyway, energy transition is an emerging market, so we have to adapt the database to that situation, and we are pleased to do so. And it helps us to have a very low granularity, a small granularity, I would say, to trace all those projects. And we ambition to make Project Smart Explorer to be the best in class regarding energy transition project, so that you can take advantage of this new market and very interesting market. So by definition of these categories, we mean oil and gas covering upstream and midstream, onshore and offshore. By petrochemical, we consider any downstream project. It can be refining, petrochem, or chem, up to fertilizer. And energy transition is embracing a large scope of application, as you can see, starting, of course, with carbon capture, electrification, energy storage, hydrogen with all colors, power generation, solar, water treatment, waste recycling, and windmill. So you see a broad scope of application, but all of them deserving some attention from your side and from our side through the database. So let's start the topic of the day about this market demand and the overall structure of the market. Here on the left, you have the last figures of the production and consumption of oil. And as you can see, and we could anticipate on the last webinar about this quarterly meeting we have regarding the market outlook, we could notice that the demand was again back to 100 million barrels per day. So at the end of 2021, we are not yet there, but we are around 98, 99 million barrels per day. and the expectation is to exceed this 100 million barrel per day somewhere later in 2022. We don't know exactly, but the estimation from a different organization is that the consumption should grow by some 6% in 2022, which would add up 2022 somewhere around 105, 106 million barrels per day. So, which is huge because it's, as you know, as soon as the consumption is reaching 100 million barrels per day, in fact, we are very close to the maximum capacity of production of oil in the world. It's only maybe 3 million or 5 million reserves, which are not yet solicited on the market. So, of course, it creates some tension on the market, and we can anticipate that if really the consumption continue to grow as it is today, so that we should exceed 100 million, we can anticipate some tension on the market, and of course some consequences on the barrel price as well, as you can see on the curve on the right, and you may have seen that on the medias already, where we see the price of the barrel not rocketing yet as it used to be in 2013, 2014, but close to $90 per barrel, which reflect this tension, not only due to war in Ukraine or in Syria and all those aspects, which of course doesn't help to cool down the price of the oil, but anyway, fundamentally, the main reason is this demand, which is, let's say, close to the maximum of capacity of production in the world. So the consequence is appearing immediately in the USA, because you know that USA is today the country which is able to adapt its production very quickly with the shale oil, and if the barrel price is increasing because the demand is increasing, that's where the US will adjust to meet this demand. And on the left, you have this bar graph showing the number of rigs in operation in USA. Again, we are not yet at the same level as we were before the COVID crisis, but we are not getting that far, and the curve, if it continues in the same way, should cope with 2019 record along 2022, somewhere in the middle of 2022. What we can notice is that these rigs in operation are operated by mostly independent companies, which again are the company which are the most flexible and have very easy to turn on or turn off their activities, and so to adapt to this global demand, their capacity operation. Regarding the international oil companies, they are coming back in this market, but we'll see in more detail in some slide that they work at different pace. They move into different mode here, and so it's difficult to make a general conclusion regarding IOCs at this moment, because they don't work exactly in the same direction and at the same speed. So they are not really a key player in this game, which is again very much dominated by independent companies. But you can see also the curve of the production of oil in the US. So it's again not yet at the level it was before the COVID crisis, but somewhere later in 2022, we shouldn't be far what we have seen, especially again if the demand is going to exceed the 100 million barrel per day. Regarding the gas, the situation is evolving as well. The picture on the left, you may remember it from the last meeting. It was just for the people who missed it to remind them that gas market has nothing to do with COVID. The demand is there, whatever happened, and is increasing regularly. It is, of course, following some seasonal effect, as it always been the case with gas. The demand increasing during winter and decreasing during summer, but overall the overall trend remained positive. And if we look at the curve on the right, the key point to take away from this curve is a comparison between Australia, Qatar, and US. where US in red is catching up Australia and Qatar, which were until now the two champions in the lead, to take the lead. And we can anticipate that this leadership in LNG market overall in the world between those three countries will continue, because, as you know, there are huge projects in Qatar, huge projects in Australia as well to increase capacity. So that shows how much the world has appetite for LNG globally, and the discussion for Ukraine, for example, around Ukraine, is reflecting this tension about the gas market. And here we can only guess that this market will continue to grow with investment required with it together. This slide also is very just to keep the message regarding the petrochemical industry, where the takeaway, the point to take away from it is that if you compare 2021 and the perspective for 2025, you can see that in about 5 years, the demand will double for ethylene, which reflect somewhere the demand for all kind of petrochemical product, and so that predict, of course, a strong demand on ethylene crackers, for project for ethylene crackers or naphtha crackers to supply this petrochemical industry. So here as well, you can take it upstream, you can take it downstream. In fact, all studies goes in the same direction to show a strong demand for the future on those products. And even if we observe some positive movement on the recycling activities, recycling polymers, for example, this recycling project will remain a small part, will have a small contribution, at least for the next 5 years or 10 years, to this global demand, asking still for more crackers. Okay, here is the air traffic. Where we compare 2019 in red, 2020 in blue, and 2021 in black. And the key point to take away here is that at the end of November, the air traffic is back to what it was in 2019. So, okay, maybe these last 2 months we have seen some slowdown due to the COVID or Omicron. But anyway, the overall trend is here, mainly in US and Asia. And 2022, there is no doubt that air traffic will be at least equal to 2019, back to normal. So that all indicators go in exactly in the same way, where more or less COVID is no longer a big issue. It is pretty well integrated in our business life and in company life. A small focus on international companies, because here there are a major change. We observed major change during 2021 here with very different attitudes. So we took only the key major companies, where BP has announced during ADIPEC in November officially to move from international oil companies to integrated energy companies, so-called IEC. And focusing on low carbon energy, renewables, bioenergy, hydrogen, electrical vehicles. Okay, all investment should be concentrated on those activities, while anyway the cash flow will continue to come, of course, from the fossil fuel activities they may have in Russia, they may have in US, or somehow in Europe. Okay, but anyway, the future of BP is what they call beyond petroleum. Shell has been suffer from a Dutch court decision to reduce or cut their emission by 45% by 2030, and to prevent any Dutch bank to finance a Shell fossil fuel project. So as a consequence, Shell said, okay, we move to UK and to try to maintain at least our activities and keep our hand free about our destiny. But anyway, Shell, of course, has frozen all their investment in fossil fuel. So far, in 2022, we should see some project to move on again, but it will be very, very limited. And in 2021, for example, Shell spent more money to buy back shares than in project. Same for Chevron and Conoco. They have more or less frozen all investments. They just proceed to financial operation. It can be what they call asset optimization, which means selling asset everywhere they can, and use a major part of this cash they collect from this asset trading business to buy back share and maintain their activities, their values as much as possible in stock exchange. For 2022-23, we have limited visibility regarding Chevron or ConocoPhillips project, so we don't expect so much from them. In a opposite way, Total and Exxon behave very differently. Of course, they invest, especially Total, in energy transition, solar, renewables, hydrogen, and you can see how much Total Energy is very, very dynamic in this area. Exxon took a bit more time also to make announcements and to take decisions in this direction, but they do it. In the same time, they don't give up at all from the conventional business, oil and gas and petrochemical and so on. So it will be really companies working on their two legs, one leg being the commercial business, producing cash, and the second leg working on energy transition with all the uncertainties and financial challenges they face there. But anyway, they find a right balance for their account. So we'll see in 2022 total different dynamism and picture from those companies. Okay, that's an introduction for the next part of that presentation about what we call market shift. We mentioned that already last time, but we wanted to share the last figures to help you to understand this phenomena and help you to have a vision on it and to draw the conclusion for your company that you should take out of those figures. So here, this slide is comparing the split of the market between IOC, NOC, and independent. Here we consider the role of the operator in the different projects which have been, for which the EPC contract has been awarded. So in 2019, we can see that the market was split about equally between IOC, NOC, and independent in the EPC contract awarded. And here it covers all things, oil and gas, petrochemical, and energy transition. In 2020, we could notice already that the IOC lost about 50% of their market share, and in a opposite way, national companies and independent have increased them. And if we look at 2021 at the end of December, then we see the confirmation that international companies didn't disappear from the market, but they came down to nearly 10% only, leaving nearly 90% of the market to the national company independent. And you can see how much the national company are now becoming dominant on that market. So that's very, very important conclusion for you. It's a very high-speed phenomena. And if your history of business was concentrated on IOC, you understand your business, your own business is in danger today, and you are highly exposed to disappear from the market if you are not able to relocate your business and refocus on other target very quickly among the national companies or independent, because IOC will not be able anything to do for you. If we look at the forecast for 2022, there is no much changes. You can see that IOC should increase a little bit their part from 11% to 15%, but it's not a major change really. You can see that national company will remain more dominant than ever, and independent represent quite resilient part, and we should see the share increasing along the year. So at the end of the day, the IOC would end up in 2022 somewhere around the same level as 2021. So it's a huge market shift. It's very, very important to realize that, to evaluate where you are qualified, where are your references, and to adjust your strategy to make sure that you are choosing the right horse to race in 2022. Otherwise, you will be sitting on a donkey while your competitors will be enjoying race horses. Okay, so that's very important to notice for you, and that's one of the key points for your strategy. Project outlook. Okay, here you are familiar also with this bar graph. It shows how we see the market year per year, split between oil and gas in blue, petrochemical in red, and energy transition in green. If we compare the three last years, 2019, 20, and 21, in fact, we see that more or less, okay, oil and gas slowed down a little bit. Petrochemical remain about the same, and most of the increase came from energy transition. But then when we look at the forecast for 2022, 23, and following years, you see that, okay, everything is booming. Energy transition, of course, is booming. It's going to double more or less, but you can see that oil and gas is going to increase extremely significantly, and petrochemical as well. It could be mainly refineries and petrochemical, which were not so far, and that would move forward next year. If we look where we stand today, what are the actual numbers? It's very interesting to see that EPC contract awarded for 2022 here are already representing nearly 80% of what had been awarded in 2021. Of course, this important amount of EPC contract awarded in 2022 has not been awarded between 1st of January and today. In reality, what we see for 2022 represent the EPC contract awarded in 2021 for execution in 2022. Same for 2023. Okay, and that's very, very important, and it shows how much is the importance of the new business model we mentioned last time, where more and more operators are converting the FEED contract into EPC contract directly without tendering it. And here we see year per year how much this percentage of EPC contract awarded before the final investment decision is increasing, giving to the FEED phase more and more critical importance for the selection of the vendors, subcontractors, if you are part of them. So then if we predict, if we try to make the link between the forecast we could see on the previous slide and the actual picture, we can see that 80% of last year is already awarded, as we said, and this market is captive. So either you are part of it, and that's great for you because in 99% of the cases you will get the business in 2022. So more or less your figures for 2022 are well secured. If you are not part of it, this market is closed for you, as simple as that, because the vendors have already been selected. So hopefully, we hope all of you, especially our customers, to be part of those lucky one who are part of those projects already awarded. Then the blue reflects the project to be awarded in 2022 for execution in 2022. And then in gray, as usual, we'll have maybe 25-30% of the project that will be postponed for whatever reason to the following years. So that's more or less the kind of routine we observe now, and that gives us a view of the situation for 2022. Geographically, where do we stand? So on the top here, we look at a project awarded in 2021. On the top, you have the split between oil and gas in blue, petrochemical in red, and energy transition in green. And of course, you see that money-wise, it is oil and gas dominating most of the figures, but anyway, the other one are significant anyway. And in 2021, you can see that Asia Pacific has been the winner of the game with 40%, a bit more, 40% of the EPC contract awarded. Then it was Middle East, 25%, and then North America, which was representing 15%. All right, so that gives you the picture for what has been awarded in 2021. If we look now the perspective for 2022 to 2027, okay, on the top we have the same split between oil and gas, petrochem, and energy, and here we don't see so much difference. Everything is increasing. In fact, it's pretty simple. But when we look at geographically, we see some changes. Of course, Asia Pacific remain a very important region, but we can see that North America is taking also a key role, and then Middle East Africa also turns back in business. So Middle East, as usual, I would say, so it's pretty stable region on that respect, but you can see that Africa is back on track, back in business, and that's also very interesting for all companies which used to have a good business in Africa. It can be a West Coast or East Coast, but overall Africa will play a key role in the next 5 years, while Europe and South America will lag a little bit behind on that respect. Here you have a picture on the Google map of all the projects awarded in 2021. So these projects are represented by the green dot. Okay, and then if we compare this picture with the perspective we have for 2022, you see a big difference in terms of volume of project being awarded, maybe twice more, and the coverage as well, where Europe will increase as well in number of projects, Asia Pacific as well, Africa, and as I mentioned earlier, and North America as well, which will continue to grow. So all the world will benefit from the investment in 2022. There is no more bad region where to go in 2022 compared to what we have seen in the last 2 or 3 years. Now we come to this last topic we wanted to share with you, which is a major change of 2021 and continue to change the picture of the market for 2022. First of all, we want to share with you two definitions, I would say, because energy transition is a very global wording. I mean, it's you can put more or less whatever you want into it. The first thing on the left on the bar graph is to see how this market is booming. First of all, that's for sure compared to previous years. So it's very good, and it's only the beginning. We believe that this picture should only increase year to year, and between 2002 and 2003 or 5, we can believe that this picture should double roughly. Now, the key point to notice here is that it is running at 2 speed. 2 speed because on one side we have the renewables, okay, mostly solar and wind, which are taking off but facing financial challenges. As you know, those projects have hard to get a reasonable payback as may be expected for any investors. It also suffers from unclear carbon footprint. Okay, when you put the question of what is a carbon footprint of a solar panel or a windmill, it's very hard to get any answer or any figures. So this situation is not really good. The community's acceptance is more and more challenging, at least in Europe. In North of Europe, okay, they are used to, but south of Europe is far from accepted, and USA is a question mark as well. So renewables are moving clearly, and it will be the future in many aspects, but it's not moving at the speed we could expect, and face massive difficulties in many aspects. So it's really it's going to be a long-term process to see those renewables projects to really materialize and become a consistent market. In opposite way, we talk about decarbonation. Decarbonation offers a lot of opportunities and advantages. The first of them is, of course, to measure immediately the CO2 we can save. Okay, you put that much money, and with this money, you can expect to save that quantity of CO2. So that's very interesting. Then the technologies are more or less the same as in the petroleum industry for most of them. So that means they are available. They can be mobilized pretty easy. The nature of the project is also the same, so it means that engineering company, contractors, and suppliers like yourself have easy to go and find application for your product and services. The community acceptance is, of course, excellent because, as you know, you explain to people that you are going to reduce CO2 emission in a very concentrated area, which is mostly already industrial areas. There is no problem. And as a consequence, we observe that these projects are running full speed. And here is really a short-term opportunity that you should consider in your priorities. Now, let's see what we mean by renewable and decarbonation in more details. So renewables is already pretty well known. It's of course wind. It can be offshore, onshore. We see also project of wind in hydrogen also coming up. But technology, as you know, is not that easy, and they are a very expensive project. Solar is of course also well known. I mean, we have all seen this, mainly on the photovoltaic basis. The other one are more marginal technologies. We also put here water and power because water treatment and especially water desalination are very much or more and more related to wind and solar because you know those processes are very much energy consuming or energy intensive, and those projects are very much related to renewable investment as well. So there is a close connection between those two. And power is, of course, hydrogen. That's basic. And nuclear. Okay, there is a big discussion about nuclear, if it should be considered as a renewable or a transition energy. For instance, we put it in renewable because, okay, that's where it would fit best, and that's where some countries would like to consider it. But I know that, of course, not all countries see it the same way. But for us, we don't care. It's a way, of course, to develop the business anyway. Regarding, and the common point of nuclear is that, as you know, is a very, very long-term process in the same way as solar or wind. Decarbonation is different. Decarbonation is much more detailed. We see every day new application popping up, and with Project Smart Explorer, we try to trace as much as possible all those applications in very details because each one of them offer fantastic opportunities for you. So it starts by electrification. Electrification, okay, we'll come back in more detail of what it is, but it's about transporting to electrify offshore facilities, for example, by AC or DC current. Carbon capture and storage. There is a long chain of processes which start, of course, by the capture of the carbon, its transportation, the storage, and onshore or offshore, which are following different processes with different players involved. Then, together with hydrogen, we put ammonia and methanol because those three molecules are very much connected together for the production, but more importantly for the transportation, because as you know, transporting hydrogen is some kind of challenge, while transporting ammonia or methanol is not an issue at all. And of course, there is a lot of ideas how to combine those molecules together to develop the hydrogen industry. In gray, of course, blue, green, and to install a storage and terminal as well in gas or liquid, depending as well the methodology which is required. But hydrogen is evolving pretty fast now. For the use on plane, cars, and so on, okay, it moves at slow speed. But in the industry, to decarbonate the petroleum and chemical industry, we see quantities of projects popping up right now, and where hydrogen is used in a way or another, and that is right now. Recycling is something new. we saw emerging mostly last quarter, but very fast. It can be to use waste to energy, waste to plastic, waste to chemical, waste to hydrogen, of course. Regarding the waste, it can be quantities of different type of waste. It can be domestic waste, it can be industrial waste, it can be plastic waste, it can be fuel waste or oil waste, etc., etc. It can be wood waste, for example, as well. So we'll come back on that, on those different processes on the next webinar. But here we could say that the imagination of the engineers to monetize waste and recycle waste is nearly unlimited. And that's really great because we see quantities of new processes coming up, especially in Europe and US, by the way, which are economical and economically viable. We may be pretty sure that next to your door, there is tomorrow such a project popping up. You had no idea, but it is just less than 50 kilometers away from your home or your office. So it's really easy to get and to touch it, as long, of course, you have the information. Bioenergy is also very important. Biogas, biofuel, that was already the case in the past, but now it takes a different dimension. And what is booming as well is this sustainable aviation fuel, which is attracting a lot of investment because with this technology, the airline industries can promote that they are running planes with low carbon emission on each flight. Okay, because the emission of CO2 has been already considered in the decomposition of the waste and using those waste in a proper way. That means that the airline is flying, the plane are flying emission free. So that's why all the companies, especially in US, in Europe, and also in Asia, are investing massive money to equip all airports with a sustainable aviation fuel project to run those flights free of CO2. Energy storage is popping up as well. That has been something known already for some years, but taking now a new dimension, and we should see emerging this category as well. It can be using hydrogen, electrical batteries, gas compression, or mechanical. Again, we'll come back on that in more details in the next webinars, but at least we wanted today to alert you about all this type of application where most of the operators are new, okay, the complete new players on the block, coming with new technologies, new financing, partly benefiting from public financing, especially in Europe. But even without public financing, in fact, those projects shows high profitability very quickly, and that's really great. And it can apply for new projects, but it can also apply for existing facility. And that's also very interesting because more or less, those projects will be brownfield projects on existing facility in Europe or in North America, as I said, and next door to where you stand. So that's why we wanted to alert you today again and invite you to join our next webinar to see more detail about it. So we come to the conclusion. It always goes too fast. Sorry for that, but that's also the purpose, not to take too much of your time. So clearly 2021 is a recovery year. Clearly, COVID is integrated in the strategy and the management of those companies, including your own companies for most of them. Okay, transportation and business trip are still limited, but anyway, there are many other ways to do business, especially using Project Smart Explorer, of course, but by other means as well. 2022 clearly should continue the same trends and to accelerate. at least 2022 should exceed 2021 by 10-15% at the end of the year in terms of EPC contract awarded. That applies to all regions in the world. We can say, okay, Asia Pacific will lead the game as usual, but North America as well, but Europe will not that bad. Middle East will remain a very solid region, whatever country you take, except maybe Kuwait, which is a little bit in trouble because of a political game over there, but otherwise all other countries in Middle East are dynamic. Africa, as we said, is running very well, even of course Egypt and North Africa, but East Africa, West Africa will go very well. National oil companies independent lead the game by far with nearly 90% of market share in terms of capital expenditure in 2021. We should see more or less the same figure for 2022 because only, as we said, Total and Exxon should manage to show a good face in 2022. But for the other one, more or less, you can forget them. The demand for oil and gas and petrochemical is not a question. Okay, I think it's very clear for everybody. The only question is how fast it will reach or exceed 100 million barrels per day, which is again very close to the limit of capacity of production in the world. So that predicts some tension again in the market. So the question is not to limit that demand, but to decarbonate it. And that's where we are back to the previous slide, where we see the importance of the investments in the decarbonation. And the good news in this story is that if in the next couple of years, because this demand is standing that high, the barrel price should stand at that high level, and that would facilitate even more the financing for decarbonating existing facilities or a new project to come, and that's of course extremely helpful. So that's a double win for you. In a way that not only the project will come up, new project will come up, but again, decarbonation project will come on the top of what you used to do. So for you, it's a double win situation. As we said, decarbonation is a short-term opportunity. It is right now. It is using your equipment. Not much more to do except, okay, for hydrogen application, but you are working on it. But for the rest, it's more or less business as usual. Regarding renewables, for the one who are interested in there, okay, you should, of course, continue to focus on there, and it will take off. But it's more challenging, and it's more long-term process, but it is now anyway. So there is no bad aspect in this market as we see the perspective for 2022. Everything is positive, but with different degrees of interest. In terms of profile of companies, in terms of application as well, and we'll be pleased to help you to jump into those opportunities, at least to help you to rank priorities, because the challenge for 2022 for you will not be so much to find new business, because it will be plenty everywhere, but to find the one which are the most interesting, the most rewarding in terms of margins, and the easiest also to execute from a supply chain point of view. I will stop here to leave the time for questions.